As widely expected, the Federal Reserve kept the interest rate at the level of 0.25%. The regulator intends to maintain ultra-low interest rates until its employment and inflation goals have been met. This was the main event of yesterday, yet it will have an impact on markets today. For instance, it has already affected the US dollar index and other financial instruments. Which ones? Stay with us and you will find out. As you can see on the chart of the US dollar index, the quote fell to the level of 90.50 yesterday. The greenback declined after the announcement of the FOMC meeting results. Fed Chairman Jerome Powell said once again that the economy is a long way from employment and inflation goals. It will probably take some time to achieve further substantial progress. The regulator also said it would continue to buy back $120 billion of assets per month, including $80 billion worth of Treasury debt and $40 billion in mortgage-backed securities. Currently, this measure has a negative impact on the trajectory of the US dollar index. So the US currency is likely to remain in the range of 90.40 and 90.75. Today, investors are waiting for the release of GDP data for the first quarter and weekly jobless claims report. This may also affect the further movement of the US currency. After yesterday's Fed meeting, the US dollar reversed downwards after a moderate rise. The dollar-yen pair did not consolidate above the upward target level and retreated 108.65. It's too early to jump to conclusions. Now the quote does not have enough steam to return to the high of 107.50 locked on April 23. Today, the yen may stay flat as traders are closely monitoring the developments in foreign markets. Besides, the yen has weakened considerably as Japan's economic recovery may be stalled due to a surge in new coronavirus cases. The yen also incurred losses after the Bank of Japan admitted that inflation would not reach its 2% target until early 2023. This is why the yen is losing ground against the US dollar. It's likely to be trading in the range from 108.40 to 108.85. Meanwhile, the Australian dollar is approaching the target level of 0.7820 for the second time. In January and April, it failed to break through this level. However, this time, it has all chances to break such a strong resistance level. Technical indicators also signal a possible breakout. If the quote breaks above the level of 0.7820, it may well reach the first target level of 0.7850 and then 0.7880. The further movements of the main currencies will be determined largely by fundamental factors. Stay tuned and do not miss our next video review. We are sure you will find out a lot of interesting things.